do it on the first chart that you pull up, and then after that, the rest of them will automatically become white. Okay, so for those people who need extra help, just send me an email, or those people who wanted to give me feedback on what type of training package you're interested in, melanie.suntrades@gmail. I'm just going to quickly send that to you because a couple of people asked for that. melanie.suntrades@gmail.com, and I can also troubleshoot and help you with more things about setting up your Segredo. So let's start with the agenda for today. Now, the first thing I want to pull up really quickly here is the, as we covered in the last couple of weeks, we covered the basic trend trade and our basic counter trend trade. And we went over the basic rules based on your standard Ninja indicator package. Now, with the counter trend that we covered and the trend, you're going to be following most of the rules for the reversal trade. So we'll come back to the rules in just a second. But one of the main issues we're going to address today, and that is the difference between something that looks like it's going to change direction and something that actually does, for the most part, change direction. And one of the main deciding factors using your basic indicators as to what is an actual reversal versus what we call a small short-term retracement. Some people call it a pullback. What is the difference between a retracement and an actual reversal? Well, most important indicator we look at is the 13 EMA, the green trend line, the solid green trend line that changes from dark green to light green. And notice when it crosses that 20 SMA, that is when we say it's actually reversed. Now, remember when we talked about in our counter trend class, we talked about using additional indicators when they align will help you to see when your market is gearing up for a nice counter trend. And the additional indicators are when your three stows are at your overbought or oversold point. As you can see here, our three stows are at the oversold and are turning around and going back up to overbought. And so using that oversold and overbought information, the same with your MACD. If your MACD is below the zero line, or the center line as we call it, and it's looking like it's starting to change angle and get ready to go back up to overbought, that alignment helps us to see that the momentum of the downtrend is pretty much come to an end and the market is looking like it's going to change direction. But here's the problem. A lot of traders, when dealing with reversals or counter trending, when you're real time, and we're going to do this real time on the replay so that you can see it actually as if it was real time. A lot of times it's very hard to distinguish, even with the additional indicators, what is short-lived, where it ends at some sort of barrier, which is usually the 13 EMA or the 50 SMA. But when you can see here, when we're dealing with something that's a retracement, because the trend is so strong, there's so much momentum in the trend, the counter trend is short-lived, and it hits up at resistance. The resistance point is the 13 EMA in this case, so that becomes the resistance point. So because there's so much momentum still in the trend, it's not really ready to reverse direction and change from a bearish market to a bullish market. Because of that factor, what happens is as soon as it hits the first barrier, which is the 13 EMA, that acts as a resistance point. Even with the alignment of the stows in the MACD, it will turn right around on you. And it's very hard to see when you're using your basic indicator package. It's very hard to see that it's not going to turn around on you. It's usually after the fact. And what happens with traders is, because especially those traders who are not going for a specific scalping target like your 3 ticks or your 2 ticks, those traders who are trying to capitalize on more of the trend, what happens is as soon as it turns on you and the momentum comes in, traders become what I call the deer in the headlights. They just sit there and they watch and they watch and they hope it's going to turn around, and usually by that time it either hits their stop, or in some cases traders actually blow up their accounts. So this is a very important issue to address when it comes to reversals, because this is where traders get caught. So we're going to be going into how can we avoid this, especially using the Segredo. The Segredo is a very useful tool to help you in this situation, whereas the Ninja indicators are not quite clear enough. You know, one candle looks like the next candle, one trajectory looks like the next trajectory when it's right side of the edge. Because then if you can look over here, I'm going to move along. When it's right side of the edge, you will see in this scenario, we've got the same stows, we've got the same MACD, we've got the same green candles, the same HMA color change indicator with our linear regressions, and ultimately the price action reverses and the 13 EMA crosses. So we get a little bit more price action going all the way up to the 50 SMA. So it's not so easy to distinguish the two on your Ninja indicator package. And so this is where we're going to bring in the Segredo and help to address the problem. Okay, so let's do this. I'm just going to quickly connect to the replay, and then we're going to look at how we can fix this problem. The first thing we're going to do, for those people who don't know how to use your replay function, there is a video in the FAQ, and remember there's also additional videos in the self-paced course on these strategies. So if you want to revise what I'm talking about tonight, please feel free to go through the self-paced course. So the first thing I'm going to do is disconnect from my market. I've already downloaded it today. So all I have to do now is go to File, Connect to Market Replay Data. And a lot of people get stuck here. I still get emails saying they confused about the replay function. And I'll explain to you how to set your replay. Remember, when you connect to your replay market data, you get a little box like this. And notice that the date in the from box will sometimes go as far back as the earliest time that you downloaded something. And you must at some point clean up that download, because you're adding more files and files and files and you use up all your memory. So there is a PDF in the members download link on the Shadow Traders website that gives you the instructions on how to erase your old downloads, okay? Especially when you've been doing a lot of replay in your practice time. So if you wonder why your charts are not working, it's usually because the from date is at an old date. So you must check that and make sure, just click the drop down, that you are in fact on the right day that you originally downloaded for today. And then you can right click on the box, select go to, and then just choose the time that you want to get started. Now we're going to go to 8 o'clock in the morning. Let's go to 7:59, because we're going to quickly look at the first example. I'm going to show you a couple of examples, and I mainly want to address this big confusion about retracement versus reversal and how to better define when it's really going to give you more price action versus just 3 ticks, a short-lived trade. So here we are, as you can see. Remember, our reversals or retracements are actually your counter trending. So we're going against the tide of the trend. And the best way to see the trend, as I always say, is you must look at the majority of the moving averages. Anytime you have 3 or more moving averages going in a direction and the price is clear of it, then you know that is the direction of your trend. So at the moment, we are in a downtrend because majority of the moving averages and the price is clear on the short side. Now, what I'm going to look at is I'm going to push play for a second. And I'm just going to bring up the replay box because I'm going to do a typical scalping trade. And then we're going to look at what we can use to define our entry. So as you can see at the moment, our stows are at the bottom at oversold, waiting for that stow 20 to tick up. Our price is now just crossed our HMA, our red HMA. And our Linreg 4 has given us the asterisk showing us that we've hit the confirmed low, and we turned, giving us a nice sharp V, which is one of the basic rules that we look for. Remember, we're looking for that. Linreg 4 makes a sharp V, and we're looking for 5 or more ticks in divergence, which we can see here. We have the divergence in place to give us that 5 or more ticks. Now, for some people who like to do a level 2 entry, as you can see there, I'm in my trade, and I'm going for, you can go for 3 or 4 ticks. If I've taken 3 ticks, I'm already out my trade. As you can see, the stow's moving up, and there's my basic scalping trade, which we call a retracement. Now, if you look at the Segredo, let's take a look at the Segredo for a second here. Now, I can only look at a historical Segredo at the moment when I'm doing replay, because the Segredo is not on replay. So we're going to look at a static Segredo chart to see how this lines up. If we look at the Segredo at this 8 o'clock window here, we're going to see that based on my entry here at 8:01, you're going to see a green bar with a green number 1 and a yellow bar at the bottom, which we call the histogram, with a green number 1. This is what we call in sync. When you see the green bar matching the green number, that says there's strong agreement. There's enough traders trading in that direction to tell you that the direction is true. It should guarantee you a fill. If you see something like this over here at 750, where you have a green bar with a red number, that we call Christmas, because green and red is the color of Christmas. And when you see the color of Christmas, that says there's not enough traders trading in this direction. There's some indecision in the market. So chances are it's going to go flat or go sideways or change direction. So you want to not take your trade when you see the color of Christmas. You want to take your trade when you see green on green to go long. Obviously, to go short, you're looking for red on red, a red number with a red bar. Now, it's very important to understand when we're dealing with the counter trend that we're mostly looking for the yellow and the blue bars on the histogram part, this bottom section here. The blue bars represent counter trend short, and the yellow bars represent counter trend long. So it's important that you recognize when your trend is coming to an end. And the way to do it is, if you see that we're coming down red bar, red bar, red bar, red bar, that's representing the downtrend short, suddenly you start to see the yellow come in. That's giving you a heads up to say, you know what, this trend is starting to fizzle. Start looking for your counter trend. Start looking for your retracement scalping opportunity, as we just did, or your reversal opportunity. Now, I want you to notice something, because look what happens here. Notice that it is a 1-minute chart that I'm using. I could use a 3, a 5, 15, but in this case, I'm using a 1-minute Segredo with a 1-minute ninja chart. And everything lines up perfectly. But had I just been 1 bar late, can you see? I took the number 1, green on green, right at 8:01. Had I just been 1 bar late, I would have started trading on Christmas. So for those people who are nervous, hesitant traders, the traders who like to hem and haw because you've lost some money and you're not quite sure, Segredo is really useful for you to get the timing down. Because if I was waiting just a little too long on my ninja here, waiting for maybe the second stow to cross, you can see I would already be in trouble. So trying to catch, if you're going to scalp and steal 3 ticks on your retracement trades, you definitely want to catch the number 1 as best you can, especially if it's the first real attempt to counter trend against the trend. Because remember, there's a lot of momentum in this downtrend. So it's very, very important when you're scalping your 3-tick trades that you don't hesitate for too long. You must catch those number 1s. Okay? 2 at the latest, and as you can see, even number 2 will be too late for you. Now we know at this point we're just in a retracement. How do we know that we are in a retracement according to Zagredo? Who can tell me the answer? How do we know that we're just in a retracement at this particular moment? Why not the green 2 right before the 1? The green 2 right before the 1. Well, you mean the green, there isn't a green 2, there's only a 7. No spoon effect on the 13 EMA. 13 and HMA have yellow bars are blue histogram. Okay, good. Looks like Kelly gets a chocolate chip cookie. Good job, Kelly. The answer to the question is that the HMA, which is the green and red line that hugs the price, that changes color from red to green here, has not crossed the gray line, which is actually our 13 EMA. As you can see on our ninja chart, our 13 EMA is green, but on the Segredo it's actually gray. So notice that our HMA, this same HMA trend line here, on the Segredo actually moves a little faster on the Segredo than it does on the Ninja. Notice that. Has not crossed our 13 EMA. So at that particular point, we know that it's still a retracement. So you want to pay attention to those crossings. Very important clue as to be able to define whether you are in a reversal versus just something that's a retracement. So the color, some of you said the yellow bars. The yellow bars is not going to tell you whether it's a retracement or reversal. No, 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 because you're going to get some yellow in lots of places. Anytime you see some counter trend action going on, those yellow and blue bars are going to show up. But it doesn't mean just because you get yellow or blue bars that it's going to hold its direction. Okay, so let's push play here and continue, and let's do the next trade, and then we'll be able to see the difference between the actual plotting of the retracement and the reversal. So I'm going to click forward for you here a little bit. So as you can see, it just belly crossed here. Where are we? Yep. And now it's come back down. So we're going to push play again here. Just going to speed it up a little bit because I wanted to. So in this particular case, we got a little bit of extra price action, but it didn't sustain for too long, and then came right back down. We have the Xmas on the chart oscillator is okay, but no confirming on the chart. We have Xmas on the chart oscillator. No confirming on the chart, exactly. Now, you can see the leftover momentum in the trend is pulling the market back down. And notice over here again, we've got some green. We've got another tiny little pullback here. You can see it's a number 7. So would you really be interested in this particular trade at 813 to do another retracement trade like we did before? The other one was good because if we compare apples to apples here, the other one was good. Why? What's the difference between this retracement trade and this flash of green, even with that HMA? What's the difference here? This is at we've got some yellow bar here. What's the difference between this one and the second one? Who can tell me? What stands out to you according to your Segredo and your Ninja? On that example, in the real time, the candle will not have closed yet, so can't it potentially change color and become Christmas at any point? Yes, a candle can potentially change color, even on the Segredo. It can start out green and go to red, absolutely. But usually when you've got the bottom matching the top, along with the HMA, and you can see your setup for your counter trend with your stows here, usually it's going to give you enough. You can see we've got extra price action here. You're definitely going to get your 3 ticks or more for a scalping opportunity, especially in something like gold. Gold and crude oil, fantastic markets for counter trending because there's so much volume in those markets. Unlike markets like natural gas and the euro, these scalping opportunities are not going to work so well because there's not enough volume on the counter trend. In those markets, you want to stick with the trend. But in gold or crude oil, you can get away with going with the number one. A lot of times, even if it turns to Christmas after, usually the green will continue to come in if the bars are green on green or red on red. So the answer to the second question is, what is the difference between example A and example B? Why would you consider this one and you would rule out this one as an opportunity? And the answers I got were red HMA, red numbers, bar number, not as much divergence, red versus green numbers. Exactly, not enough space to the gap, 5 ticks or more. Exactly, you guys know the rules. Very, very good. So as you can see here, if we follow the rules for our basic counter trend, remember, you must have 5 or more ticks in divergence, okay? And the Lin rate giving us the sharp V. HMA, we got the HMA color change, so we got some of the basic rules, but this is where the Segredo is very useful. Because of the fact that we have the Christmas color combination, we have the red number with the green bar, as opposed to green number with the green bar. Right away, that should be the first thing you guys look for. Do I have a green on green? Before you look at anything else, that is the first thing you should look for. And I would tell you, you can in some cases do a counter trend on the number 7 or 8, but most cases it's better to wait for the number 1 or 2, because 7 or 8, you can see in a lot of times 8 can come in with more momentum to go in the direction of the trend. It doesn't always change in the opposite direction. It might change after 8. So if you try to anticipate the counter trending on the numbers 8, a lot of times you can get taken out with the leftover momentum. So it's better to wait for a green number 1 or 2 as opposed to trying to anticipate a counter trend on the number 7s or 8s. Very, very important point. But mostly it's the color combo, the green on green versus the red number with the green bar. Very, very important. So you would rule this out. If you look at your Ninja, you can see that there isn't 5 or more ticks, not like this one. We had a very nice spread. There isn't 5 or more ticks, so the window is too tight. By the time you get in, you wouldn't get filled, you get whipsawed. And we've got the Christmas to tell us not enough traders, not enough agreement in that direction. Okay? So let's continue here. And we'll be able to connect the dots in just a second. So in many of these cases, I'm going to click forward here as well, as you can see. Again, we've got some more possible retracement opportunities. Okay, but if you look at the in this particular case here, we had a little, here's a tight little one here at 18. We had a 1 and a number 2, number 3. So can you get 3 ticks out of this? It's gold market. Absolutely. You could absolutely take this trade and get still 3 ticks on this particular one, because we have a number 1 and a number 2 green on green. So, but I'm not going to trade that one right now. I want to move on to the next one. And again, because you're so close to your resistance point, which is your 13 EMA, or you can see your turquoise fractal is right there to show you your resistance point. That's what the turquoise fractal is there for. It shows you, look, this is where your resistance point is. Don't, you need to obey this as a potential barrier in the market. So here you can see the price is just squeezing through the resistance point, not able to sustain, then coming down. And so you can see we got to a number 3 on our counter trend there. Would definitely maybe squeeze 3 ticks out of it, but then you have to notice that the HMA didn't sustain and cross that 13 EMA, just barely crossed it, then came back down to continue the trend. So we're going to continue here, and we should be able to get to our reversal. So notice also that as the market is trending, it will give you several retracements, several attempts to try to reverse direction, and then ultimately it will reverse. So you want to always factor in how many attempts has it already tried if you're looking for your reversal opportunity, because if you're anticipating a reversal here at 8 o'clock, chances are it's not going to happen because we haven't really completed the trend. We haven't had several attempts of retracement. So you can see here we had a very small attempt here, we had a good one here, small attempt here, we had another good one. So now you can see that the trend is pretty much played out, and the fact that we're hitting now our support fractals. So now, looking at our STOs and our MACD being at the bottom here, we're now saying to ourselves, we've been going a while, we've had several attempts at retracements, we're going to watch our Segredo, and we're going to be looking for when is our reversal opportunity going to come in. And as you can see, there's the circle with a dot, which is the first thing we look for. Remember, you want to look for your circle with a dot appears on your Ninja indicator. Candle with a long wick or tail has just appeared. As you can see, there's our long wick or tail. That says that the HFTs have just come into the market. Okay, so HFTs have just come into the market. So if we're looking to do a little steal 3 ticks here, this would be a good time to do it. And you can see we've got 5 more ticks, and our Linreg 4 makes a sharp V, which is the brown dashed line indicator. And of course our HMA color change, as you can see here, it's just changed to green. Now if we look at this, this was a very nice retracement. And as you can see at 8:29, we've got our number 1 green on green number 1 on our Segredo. Okay, so perfect little counter trend. However, if you notice, by the time you get the number 1 at 8:29, because we had Christmas before, okay, we're already at 8:29. We're already on resistance. So whenever you're already on resistance, it's not usually a good time to enter on a counter trend. On a trend, when you're going in the direction, in this case, when you're going in the direction of majority of the moving averages, it's okay to enter on resistance. Chances are, market's going to give you so much momentum to go in that direction. But in this scenario, sometimes you're going to get a number 1 that comes in, but you're already on resistance. Okay, so in this case, when we were on the number 1, we were not on resistance. There was space still to go before we hit resistance, so it was safe. Okay, the same in this scenario here. When the number 1 came in, we were not on resistance yet. It was safe to go. We could steal 3 ticks. But in this case, by the time the number 1 comes in, on your Segredo, if you're using your Segredo timing, okay, we already are on resistance. So you might want to hold a stack in case there's leftover momentum still left over, as you can see with these previous red candles in the downtrend. So watch what happens here. This is very important, because now we're trying to establish when is the market really going to reverse, and this is where people get their timing all mixed up. And I'm going to show you this timing. We're going to do it again just so you really understand the difference in the timing and how to gauge that support and resistance information. So notice 829 on our Segredo. Immediately after that resistance point, we're coming with Christmas. The bottom looks good. The bottom is a yellow bar with a green number 2. The top is a red candle with Christmas. And this can happen a lot. So at this point, for those of you who have taken the number 1, let's say you clicked here, you now have a choice to make. If you think that this is truly the reversal that you've been waiting for all this time to grab majority of price action, you can then gauge the risk factor and decide, okay, so maybe my bars at the bottom are still yellow with green. Maybe I'll ride out these red Christmas candles and it will turn back to green at some point. You can decide that, and that's a risk model that you guys are going to have to play with to see if you're comfortable with. But there's one more trick that you can add to avoid this happening to you, and I'm going to explain this in just a second. First, we're going to wait for this candle to come in. Ultimately, we want the real reversal trade. We want this one here at 833. Notice that we started here at 829. We went Christmas, red 1-on-1, then we immediately turned back to green. So all that red coming in the middle there wasn't actually a true downtrend setup. It was just some leftover momentum coming in off that resistance point. So more traders had to come in the market to change the direction and give us a true reversal. And you can see it display when the real green, that big bar comes in, green number 1 at 833. So we're waiting for that green bar, and then we're going to go ahead and put our trade on here. So I'm waiting for that green bar to come in for my 833. Looks like we've got the circle with a dot here, another sign of possible confirmed low. I'm just waiting for the next bar to come in here. We're at 832 at the moment. Now, it's easy to see because I already know the Segredo is going to tell me 833, but let's pretend that the Segredo is real time. Here, as you have said many times, the quant gives us the heads up. Great example. Excellent. Chart number is lower on a good trade already at 7 on the retracement. Also Xmas on the oscillator. Exactly. So here we go. We can see that 833, we're looking for our green bar. Notice that the fractal ray just came in, the brown fractal, the asterisk came in with the fractal cross. Can you see the fractal cross right at 833? That's a sign that this is a significant move for those people using your Ninja. So here's my 833. I'm waiting for this green candle, and at this point my Segredo is giving me a green number 1. So I'm going to go in with this direction based on, oops, I missed my opportunity, sorry, based on my Segredo. So what I'm going to do is I'm actually going to scale out for you. I'm waiting for 2 contracts, and I'm going to put my second contract at 6 ticks, and there I already got it. So basically, you can actually take more than 3 ticks on your reversal trades. And I can actually go in for a whole lot more, and we're going to do this in just a second. And what's going to tell me I can go for a whole lot more? When we move our Segredo forward, we can see that our green number 2 is coming in at 834. Green on green at number 2. And look at our oscillator is now changed from yellow to green. That says that we now actually, our counter trend has now transitioned into a trend. So when you see those green bars or red bars come in, we are actually now in the developing trend, I call it. We're in the developing trend mode. We're not in a full trend mode per the ninja rules. Who can tell me why why would I say this is the developing trend, which is why I call this a reversal, and not the full trend? What's the difference between this rectangle and this rectangle here? Very important that you understand the difference, okay? And I'm going to show you how to read that on the Segredo in just a minute. No 3 moving averages. Somebody said a 1320 cross. No, there's a 1320 cross here. Can you see? 13 is crossing the 20, 13 is crossing the 20. Support fractal 50. All the other moving averages are still on the downtrend. Excellent. Glenn and Jeff, you get a chocolate chip cookie. Because as you can see on the top example here, as I've said many times, if we look at our rules, okay, what are the rules for the trend? We must have 3 or more moving averages back in the direction of the 13 EMA. So it must be the 13 EMA plus the 20 SMA, which is the black one, and a third one. A third one can be any color. It can be the magenta, it could be the blue, and it can be the red. But to quantify, or qualify, I should say, a real true trend, not a developing trend, as I call a reversal, you must have that third EMA, the third SMA, okay? So here's the so right away, if we were looking at our ninja chart, you can see the moving averages on top, price is breaking clear of the moving averages. This is the true trend. Here, this is the developing trend. So this part is what we call the reversal. It's busy reversing, and it started out as a regular gap strategy, crossing into a trend strategy, but it's not the full trend until the 13 actually crosses that 50 SMA. So let me show you a couple examples quickly on the ninja of when it actually crosses. So as you can see here, this is technically the trend because we've majority moving averages on top. This is actually the gap part, okay, the counter trend. This is actually the reversal part where the cross happens, the cross of the 13 and 20, and this is actually the trend part. Can you see when the 13 crosses that third moving average, the trend explodes? Now, why is this important to define these 3 timings? Because if you don't, okay, you can land up in a trade that goes nowhere. Bang. It hangs up on the next resistance point, which is where the 50 or the 100 is usually. So I can find, let me show you another one. Now in this case, notice that the price action did turn red on the 50, but then went back to green once the 13 crossed that 50. Notice that when it crossing the 50 and you got majority moving averages, there is no hanging up or holding back. The price action just goes. So it's very, very important to define whether you're on the trend or the counter trend. And the counter trend is the developing trend. So it's not the trend until it crosses that 50. And especially in markets like gold and crude oil, you must respect, you must pay attention to that 50 SMA because the price will hang up. So if you are looking to grab more ticks because you have a nice solid reversal opportunity based on your green bars of your Segredo, you must exit by the time you hit the 50 or when you see the number 6 or 7 going to Christmas. Definitely out by 7 or if you see Christmas. So we can actually trade this trade. Let's do this one more time. We're going to trade this 833 trade just so you can see. Let's go to 832. What it would feel like, and this is how I want you to do it on the replay, getting in on a true reversal and then capitalizing on the majority of the price action, paying attention to your exit point, which is the next resistance point, or if you're using your Segredo, the number 7 or when Christmas shows up. So let's try that again. So I'm going to go in with 2 contracts. I'm going to push play here. And I'm just going to jump in here. So obviously I like to scale out of my first one. So I take my 3 ticks profit. Now I'm going to let it ride, because if we look at it right now, we're what candle are we on? We're on 834. 834 is candle number 2 according to the Segredo. So I know I'm pretty much good to trade at least till 5 if I'm far away from any real resistance point. Now, I know some of you are thinking, what about the turquoise fractal in the equation? Remember, whenever you have a fractal cross, when the support fractal crosses a resistance fractal, we can ignore that resistance point, because that cross negates the resistance point, because it's telling us it's a significant move. So the fact that the brown fractal is crossing here, the turquoise fractals, now says we no longer care about the resistance point. What we have is a significant change of direction. So I'm not paying attention to the turquoise fractal, but I am looking at my exit point at around this 1328.5 factor. So, and I'm watching my Segredo. My Segredo starts to change at 838. So technically I could trade, I'm going to speed it up a little bit more. So you can see how much more price action I'm now able to take on the reversal trade versus the retracement trade, based on the fact that my quant is giving me, my Segredo quant is keeping me in a little longer. Okay, so now I can see that we're on coming to the Christmas point, 836. Still on 837, still to come green. Still a little bit more green. Now you can do one of two things. You can either put I like to put my exit point just below the 50 SMA. So I can say, okay, well, maybe I'll put it somewhere around here. I'll just put an exit point. I can decide to just be a little shy of that point, and just there I've taken my exit, or I can actually wait for the numbers. So here we are at 837. Here you can see on the Segredo we're number 5, and then we notice that we touch the 50 SMA. You can put it right at that point, just below it, and you'll see right away, once we've landed on that resistance point, the price then changes. So notice I made 200 bucks, very nice trade, on one reversal trade. So for a lot of you who are still novice traders or trying to just make a conservative 200 bucks a day, you just need to look for one really good reversal opportunity and ride the numbers from your number 1 till you see either number 7 or Christmas. And if you're using your indicators, pay attention to the next barrier on the developing trend. Okay, because this is the developing trend. It's a marriage between your gap trade and the developing trend. It's not an official trend yet, because the 13 hasn't crossed that 50. So this is the reason you have to exit at the next resistance point. Is that clear? Has everybody got that? Great example, Medea says. Is the quant 1 minute equal to the 1 minute ninja, or is the quant 3 minutes equal to the 1 minute ninja? No, the quant 1 minute is equal to the 1 minute ninja. It is equal. Okay, as you can see, look, 5 was green, 5 was green, 6 is red, 6 is red. This is candle number 7. Okay, so it is equal. It's real time. There's no laggy or leading or that kind of thing. The only thing that's slightly different is the HMA. The HMA on the Segredo Quant is actually a lot sharper. It gives you the edge. The HMA on the Ninja is going to change slightly late. Notice that here you'll see, as we're already on the red number 1, and this Ninja chart, HMA hasn't even changed color yet. So the Segredo is going to give you a slight edge with its HMA. That's the only thing that's a little faster. Now let's take a look at, okay, because there's Something else I want you to really get, and here's the gold nugget. Okay, so that was easy to see that we could make a lot of price action on the reversal. And obviously you can still trade retracements, but you're only going to get a short amount, and I would suggest going for only 3 ticks or less, 2 ticks or 3 ticks inside of a 5-tick move on your retracement trades. Paying attention to your Segredo green on green number 1 versus Christmas. Okay? Now, how can you, here's the question of the day. Let's see how many of you get this right. How can you tell the difference using the Segredo, the difference between your retracement and your reversal? See, you want to know the difference. Why? Because your retracement is only going to give you 3 ticks, and your reversal is going to give you your $200. So it's important that you know the difference. And for those nervous, hesitant traders, you don't want to be late on a retracement trade because you can potentially be stopped out. Okay, you can afford to be late on a reversal trade and still ride it out. So how can we tell? Let's take a look at this on the Segredo. How can we tell the difference between, if we're looking at real time, our retracement and our big reversal opportunity? What's the difference? See, we've got green on green with the yellow. Here we've got the yellow, green on green. How can we tell? HMA crosses a 13. HMA is a good indicator. You know, and over here, this one was a little tricky because it just crossed, and this one really crossed. So you could still get faked out on the crosses here because this one just crossed as well. If there's enough price action, because the HMA's got a slight edge on the Segredo, you're going to see that HMA is going to cross anyway sometimes. But it is a good clue as well. It's really obvious when it's very far away, then you know it's definitely not going to reverse. Oscillator angle, MACD is green. There's no MACD on the Segredo. So we're talking about Segredo. How can you tell the difference between a retracement and reversal on the Segredo? Oscillator is green on green. No, because, well, in this case it was good, but look here. This was a nice little retracement. In oscillator's green on green. It's the yellow bar with green number, but this didn't reverse. Price action came down. So oscillator's not going to tell you. Oscillator's flat. Histogram is changing green. Okay, so it's angle on the 13. Well, it's kind of hard to see the angle on the Segredo of the 13 because it's the gray line and doesn't stand out so much. Some people are colorblind. Not so easy for them to see that. Color candle in the higher time frame. Yay! Tim gets a chocolate chip cookie. Tim is the first guy to get it right here. Okay, so let's do this. Remember, as I always say, for your trend trade, if you want to look at trending, okay, the golden secret to trending, you cannot look at one chart. You must look at 2 or more time frames if they are in sync. I call that matchy-matchy. This is what defines your trend. And if you're comparing a reversal trade, which is the developing trend, to just a basic gap trade, which is really just a counter trend, you must define it by using 2 or more time frames. So we're going to now pull up another time frame with our Segredo to help us see things more clearly. And it's going to make a lot more sense. As you can see here, here's my 3-minute Segredo. This is a very nice workspace to use. A 3-minute with a 1-minute and your ninja chart sticking out the side. So you can look at your support and resistance information, but you can see where you are in the trend. If we look at, let's go back to this one here at 8 o'clock, which was our first retracement trade we did. If we go to 8 o'clock, you can see on the 1-minute chart, I'm going to just move it over like this so you can see it better. On the 1-minute chart, 8:01, we had green on green with the oscillator. So it was all good. It looked like it was going to reverse, but it was actually just a retracement. Okay, if we go to 8 o'clock on our 3-minute chart, what do you see on the 3-minute chart? You see Christmas. Look at your HMA. Does that HMA look like it's anywhere near crossing that 13 EMA? Yes, Lex, I do go over the same information both classes. So definitely want to come tonight. I've been recording the morning trading session, Ninja and Quant, so I can see the timing better. I write down the time when everything matches and then replay it back at night. That's good, Ray. So as you can see here, there is Christmas. Notice there's no green on green here. Look at the oscillator. Isn't that a huge indication that the trend is not over yet? There's so much momentum in that downtrend that it barely changes the course of the 3-minute chart. The only thing we have is a couple of green bars, but they're Christmas. There's no green numbers in here. All Christmas with a red oscillator. So if you're coming here on the 1-minute chart at 8 o'clock, even though you got a 1 and you see your 3-minute is still Christmas, you know right away you're dealing with a retracement. Jump in on 1 and go for 3 ticks and get out as soon as you hit that 13. Is that clear? It must be clear to you. Okay? Now, if you come along to the next one, which was also a nice retracement, notice the oscillator on the 1-minute chart at 8:19 is a yellow bar with a green number, and we have a green bar on top with a green number. And if you go to 8:19, 8:18, what again do we see? We see Christmas on the 3-minute chart. Nowhere near looking like it's going to reversal. So we see that the two time frames are out of sync. They're not matchy-matchy. They're not matching. Okay? Now we come to our true reversal here at 8:33. And we come over along, and what do we see? Now we see the 3-minute starts to change to yellow. For the first time now we have yellow bars coming. We still have Christmas. It's a number 8. But notice that our HMAs change color, and we have the yellow bar. Now remember, this is a static chart. There might have also been a green number flashed there for a period of time. So I will tell you this. If you see the yellow bar on the 3-minute chart and you see your green on green on the 1-minute chart, you may take the trade, especially if you see your HMAs change color and you can see it's a number 8. This is the only time I would suggest you can get in on your anticipate the direction on a number 8. Remember I made the statement earlier, do not anticipate on the number 7 or number 8. This is the only time because it's a 3-minute chart, right? So there's a lot of price action. And you've got green on green on your 1 at 8:33. So this is the only time, because remember that might have been green for a second there and then it went to a red number. But got a very nice big yellow bar. Okay? If you want to wait a little longer, you can for the number 1 to come in. You can. You're gonna lose some price action by waiting sometimes. And sometimes the number 1's just going to come in. It's not going to be a number 8. So you're going to get a little bit, it's going to vary a little bit. But the fact that you've got your green on green with the yellow, green HMA on the 3-minute chart, then you can see I would stay the course. Let's say you jump in, you're already taking your 3 ticks profit. You see that your 3 minutes coming in with a green number with a green bar on the number 1. I would stay the course. Stay the direction until your 1 minute tells you to get out. So your 3 minute is helping you to see that it's safe to stay the course and then get out when you see your Christmas or number 7 show up on your 1 minute chart. But is that clear? So that is really the secret using the Segredo, how to decide whether something is a retracement or reversal. And the other thing you can do with this as well is you can also use your 5-minute Segredo. Let me see if I have that here. Oops. And Tim says, wow. It's very important that I think when you're really looking for reversal trades that you do understand that it's a developing trend and you still have to look at it as an alignment. You've got to look for an alignment because remember in shadow traders as Barbara stated many times, the secret to shadow traders is that we're not teaching people to follow a specific indicator, hoping for the best, because we know that that doesn't work. Indicators can only go so far. Every indicator has their moments of fake outs. Okay? Even the Sagredo has moments of fake outs. You will see a number 1 then turn into Christmas. It will start out green, then turn to red before the bar closes, as somebody says. So even your Sagredo is going to fake you out at times. You can't just jump in on every number 1. As you can see, this red number 1 over here at 832 turned green. If you went short here just following blindly a number 1, you would have gotten stopped out. So you can't be a robot and just take any old number at anywhere on the system. Okay, this is not a money printing ATM machine. If it was that simple, trust me, we'd sell it for $1 million. Okay, and we'd all retire. So you have to look for specific alignments, and you have to adhere to the strategies as they are designed by Barbara Cohen. Okay, remember, she has tested so many strategies, so many systems, so many indicators, and she's concised it down to this is what the high probability strategies are that are going to work for you. And the motto is you must have 3 or more indicators in alignment to make it high probability. The more the merrier, but must be a minimum of 3. So in the Sagredo, the nice thing about the Sagredo, and the reason why Barbara and a partner created the Sagredo, is because a lot of traders use too many indicators and they get confused. And as you can see, when you're real time on your Ninja, this here at 8 o'clock real time doesn't look any different than this here at 8:30. All looks the same. One green candle looks like the next green candle. The stows look the same. The MACD looks the same. So it's very hard. The indicators are limiting. So they created the Sagredo to make it more simple, and because a numbering system is a lot easier to follow. But you still have to look for the alignment. And so you can use something like a 1 minute aligning with a 3 minute. Sorry, let me do this. And you can even use a 5 minute. If you look here at your 8:30, there your 5 minute came in with your yellow as well. So the fact that when you're in the trade here based on your 1 minute, your 5 minutes coming in, you're staying the course. Now you know you really have a reversal in place, a developing trend, and you just trade it till you see the sign of Christmas or the red come in. Okay? As you can see here, look at the previous retracements. Our 5 minute clearly said that we're still in a downtrend. Those are just a flash in the pan, a flash of green. So it's very, very important that you understand what's a scalping counter trend and what's a true reversal. Is that clear? Is Barbara still having her morning trading lab? No, she isn't right now. Shadow Traders is busy restructuring things, so we will be coming out with some other things for you, and that's why it's really important that you guys send me some emails to let me know how many of you are interested in specialized Sagredo training, how many are interested in a combo training, and how many are interested in just a Ninja training. So definitely let me know. Your feedback will really help, and I can forward it to the Shadow Traders because they're in the middle of creating new packages for you guys. Do you pay attention to the HMA flattening on the 5 minute and on the 1 minute quant? You can definitely pay attention to it because obviously this is after the fact, so it's going to be a strong angle here. But when it first turns, you're going to see it flattening. You can definitely look for the flattening of it. But look here, you can see it's flattening with Christmas. So flattening with Christmas doesn't always mean that, we're going to get something significant. Just because it flattens, it could flatten turn Christmas and then continue with the momentum of the trend. So a flatness or trajectory of a trend line is not always a guarantee. Remember, it has to be the flatness plus the green on green plus the in syncness of a second time frame, that's your 3 or more things to give you something that is high probability. And that's what you're looking for. Gap close at the higher equals reversal in the lower time frame. Exactly, John. That's what I always say. Gap trade on the higher time frame causes a reversal across on the lower time frame, because that's where the majority of your traders are. If you're looking at a higher time frame, you can see that only when the yellow came in, that told you that we had enough traders trading in the new direction, that the trend had now fizzled out, to give us something significant as a reversal. And the rest of the Christmas stuff was only a handful of traders. Hence, the reversal didn't work. And this is where Segreta really shines, and why I strongly suggest that you guys start using it more and learning more and more how to use it. And I will be teaching more of this so that you guys become sharper at spotting these alignments and aligning it with your strategies. Okay, you've spent so much time learning rules on Ninja. You all learned, you've all learned, look for the MACDs, look for the stows, look for the V on the Linreg, look for the circle with a dot, look for this, look for that. But the problem we have still with Ninja traders is that, it's not always clear, and especially when you've been trading for 2 hours, this green candle and stow alignment looks exactly the same. You become hypnotized, it's like a mirage in the desert. That green candle looks the same with the stow alignment. Exactly the same when you're right side of the edge real time. And trade for 2 hours and you'll start to see a whole bunch of stuff that look the same. And then you wonder why you still get faked out. So this should help you simplify it a little bit more and make it more crystal. But let's try another example. Let's continue here. I'm going to fast forward. Let's see if we can use another set of examples. I'm going to fast forward to 12 o'clock because here's another good example. If the candle is above the 50 and the 13 did not cross the 50, do you consider that support of 3 moving averages but still not a trend, since the 13 has not crossed the 50? Well, it's not support. That's a good question. If the candle, the question is, sorry, let me just fix this here. If the candle crosses the 50 but the 13 has not crossed yet, then you have to pay attention to that 50 as resistance. Okay? It is not a trend until the 13 crosses. It doesn't cross till it crosses. Okay? Let me use an example. Let me see if I can find a nice example for you really quickly. Be very, very careful. Especially on these kinds of scenarios, because look, you can be waiting and you go, okay, well, the candle's going through. I think I'm going to go, and you go click. By the time you go click, you enter somewhere here, and you're actually trading right into some barriers here. Remember, this is a counter trend. This is not a trend. So whatever's on top is a strong, barrier. Whatever is on top is a strong barrier. Okay, there's not enough underneath to get it through the top. That's the difference between a counter trend and a trend. Okay, as you can see here we had 3, so the price exploded, but it wasn't able to penetrate the 200. The 200 SMA is a strong barrier. Couldn't sustain. What happened? Bang! The minute it crossed below, we got 3 moving averages there in the equation. Market just took off short. And as soon as we crossed the 150, additional momentum came in. So the moving averages are defining where the majority of the traders are trading. Remember, these trend lines are not just pretty colored trajectory lines. They actually are averages of traders. That the 13 represents 13 candles of evolution. The black line represents 20 candles of evolution. The 50 represents 50 candles of evolution. The blue represents 100 candles of evolution. And the 200 represents 200 candles of evolution, which represents X number of trading going on. Okay, so when something doesn't cross it or can't get through it, the majority of the traders are still trading the direction of that trajectory of that trend line. So as you can see here, if you click here, it just comes right back down. Okay, so be careful on that 50 scenario. You don't want to get caught there. Let me see if I can find another. It's only here when it crosses that it will continue, and the Segredo will help you with this as well. It will give you your clear green on green number ones. Would you say the 1 minute and the 13 SMA is more important than the 3 minute and the 13 SMA? Yes, the 1 minute and the 13 SMA is definitely more important than the 3 minute. Your 3 minute is just kind of giving you the overall direction. It's going to be a little laggy on from the trend line perspective. But let's do another real-time example so you can really see this clearly. We're going to go here to 12:30, and let's forward our Segredo here to 12:30. Just do this. You can slide it at the bottom here, the scroll bar, just to kind of move it along. Okay, so here you see at 12:20 the trend is coming down. You can see the red on red. All right, we started at the top with the blue bars to show we're in a counter trend, and then the counter trend develops into the trend by transitioning into the red bars. Now we can start to see, here we are at 12:30, the yellow is starting to come in on the 1 minute. So right away when we see some yellow, we know at least some of the trend is starting to fizzle. It's hit a support point in the market, and we should be good for at least a gap trade. Okay, we should be good for at least a gap trade, 3 ticks minimum, and hopefully a reversal. So we want to figure out when is our reversal opportunity coming in. Now I'm going to do the 3 minute for you because we've already discussed using the 3 minute. So now let's see if it's more clear on this example. And as you can see, here we are at 12:30 on the 3 minute, and we see that our oscillator is on 7. That's a good sign at the bottom, 7. But we got some Christmas here. Okay, so let's push play, and we're going to get our little execution box up. And of course, we see our stows are at the bottom here. Our MACD's in the right place. We see the rules there, the long tail wick. Our Linwick's made a sharp V. So we've got 5 or more ticks before we land on the 13. And let me do this so I can see what bar we're on. We're at 12:30 bar here. So at 12:30 right now, we know that HMA's changed to green on the 1 minute. So that's a good sign. And we're on Christmas on the 3 minutes. So we've got some green. Okay. So we get a green number 1 at 12:31. So we're looking for the 12:31 candle to come in. And this is where we're looking to get in on our, just going to Segredo green 1-on-1. Okay, so now we know we've got some space before we hit resistance. So we're going to go for our 3 ticks so far. We want to know if it's going to reverse. And what do we see? We see that it looks like it could potentially be a reversal going to green 2. Okay, on candle 12:32, there we made our 3 ticks. But we're not quite sure at this point, per the 1 minute chart, Segredo, are we truly going to be a reversal? Or is this just one of those retracements? Because look, our stows are crossed nicely. So our stows, if we went by our stows, it could potentially be a reversal here. We do have our confirmed low of our fractal, and our HMA looks like it's going to cross here. So sometimes even on your 1 minute, your HMA is actually going to cross purely because there's so much price action on the counter trend. But now if we come to our, this is 31 going to 32, if we come to our 3 minute chart, what do we see? going to 33, we see that we're still on Christmas. There is no yellow. The oscillator is red. We've only got a green candle with a red number. That Christmas just says there's some indecision in the market. Some traders are going up, some traders are going down. That's why we have a green bar with a red number. So right away, looking at the 3-minute, we go, good thing we're just out at the resistance point. Let's just get out and be safe. And as the price progresses, now you can see at 12:33 on our 1-minute chart, we have Christmas. We've got a red candle with a number 3. Even though the oscillator is green number at the bottom, they're out of sync. They're only in sync if the bottom is green with the green number with the yellow bar, and the top is a green candle with a green number. That's when it's in sync. Okay, so the bottom has to be technically green with yellow, and the top has to be green on green. If the bottom is green, sometimes you can ride it through. You can stay the course. But if you see that your 3-minute is still Christmas, and this is now going to Christmas on top, and you see that you've got a resistance point on a counter trend, there's no extra moving average below backing the direction, you need to weigh up the risk factor and just say, you know what, it's time to get out. I'm just going to take my 3 little ticks and be done with this, and wait to see what develops. Let's wait to see when the 3-minute comes in yellow. So let's speed it. I'm going to fast forward a little bit here. So as you can see, we did actually have a very nice little retracement, and guess what happened? Leftover momentum in the market, because that was just a retracement. Look, number 8, 7 or 8, that's why I say per the 3-minute chart, 7 or 8, you can always anticipate, because we got Christmas in a 7 or 8, that the market is going to change direction. Okay, just because you got 7 or 8 doesn't, especially on a 3-minute chart, doesn't mean that the market's going to change direction. 8 can continue back to a red number 1-on-1 because there's leftover momentum in the trend. And as long as you're counter trending into those moving averages, you are always at risk. That is the greatest risk out of all the strategies. Counter trending has the highest risks. Okay, so if you want to avoid some of this risk, I suggest not doing the reversal, sticking with the trend, going with the red on red stuff, matching the 3-minute chart as we discussed last week, which we will circle back to. Okay, we'll get back onto trending at some point. So more red stuff came in, and now we're looking for the next green opportunity. Sorry, here we go, which is here. Again, some more Christmas, and we're coming in at 12:52. That is our next opportunity for us to grow for some green stuff. Now, this is going to get a little tricky here, so I'm going to do this as this is a very good example, because notice here at 12:52 we have a green bar, number 1, and here at 12:59. So you actually have more than one choice to get in on the trend. The first one with the yellow is getting in on the gap part. Remember, the reversal is the gap married to the developing trend. It's a combination of two. So a lot of times on reversals, not retracement, but on reversals, you actually have more than one chance to get in. So if you miss the first number 1 here at 12:52, number 1, number 2, and you start to see a little bit of Christmas, sit on the sidelines and then wait for them to see if the green on green comes. If the green on green comes, the green bar here as the oscillator matching the green candle with your matching numbers, then you know you're in the developing trend. And that's usually a better place to get in if you want to minimize some of this Christmas in between. okay? Because that's just telling you there's a little bit of resistance that's got to get through. And that's always going to occur on counter trending. You can see here we went green and green, and then we hit some resistance. We weren't able to get through, and we continued with the trend. So here we hit the resistance, and then we continued. Okay, so let's see how that plays out on the Ninja. So we're going to get in here at 1252 per the green number 1, and let's see how much risk we sustain. And then we'll look at our 3-minute chart. So over here we are at 1251. Just speed it up a little bit here, move it along. Okay, so here we are at 1251, and we're coming into our 1252 candle. So we're looking again, there's your same scenario for your reversals, a nice fractal cross. Watch for that brown fractal to come in. That brown fractal for those reversals says that we are changing direction, okay, for the Ninja users. So when you see that brown fractal come in, it says we're changing direction. It crosses the turquoise fractal, which says you can ignore the resistance factor. There's a significant move coming, and now we're going to go in and we're going to take our 3 to 10 ticks, okay? Now again, you can, now we're gonna take 3 ticks. I always like to go in for 2 contracts on trend trades, and I like to take some profit off the table. So I always take profit in case I get stuck on a resistance point, and then I can always move my second contract. So I'm actually only in the market for any real length of time for 1 contract. So I'm really only investing $500 for any real length of time. And because I've already taken profit off the table, if I hit some resistance, then it's not a huge stress factor for me because I already took some profit. So now I can say, well, I've already taken 3 ticks, 3 or 4 ticks. I can sit here and play the odds of we hit resistance, we were at 1 or 2 ticks risk here. So we got some Christmas coming in at 1253 because it's got to get through that resistance point. Now, if I bring up my 3-minute Segredo, notice that we had Christmas already at 1248, right? We had a last number 4, and now we're starting to change at 1254. The yellow's coming in. Notice that we may not have a green on green number on the 3-minute chart. You don't always necessarily need that. You've already got it on the 1-minute chart. But the fact that your HMA has changed to green and the yellow's there tells you per the 3-minute chart that the downtrend has fizzled. And because the downtrend has fizzled, we're now in the developing trend. There's enough counter trenders going on in the market to give us our matchy to guarantee our fill. And again, where will we trade to? Well, we can trade till we hit number 7, according to the Segredo, or Christmas, or the 50 SMA at 1322. So I could actually, or just shy of it, I could actually, put my exit point maybe just below 1322 if I like. Sometimes it doesn't always make it to the 50. You got to watch for that too. It's not always a guarantee that it's going to go to that 50 SMA. So this is where paying attention to your Segredo really helps. So we're going to use the 1-minute here along with the 3-minute. Notice that our 3-minute is in agreement. Okay. And we're going to trade till we hit, oops. Sorry. Till we hit a number 7. Okay, which is around 1315, and if we look at number 7, it's 1305. Okay, so I'm going to speed it up a little bit. See, there's the risk factor, and notice that my risk factor, even though I've got some Christmas here at number 4, This is my 1255 candle. We've got some Christmas. The fact that my oscillator at the bottom is still green, a green number with a green, and I'm only down by 1 or 2 ticks, it's not a huge amount of risk. That's, that is tolerable on a counter trend. You can tolerate that amount of risk on a counter trend. Especially by this time you can see that your yellow is starting to come in with your HMA green and your green candle on your 3-minute chart. So that is definitely a tolerable amount. Now you can see by the next bar, your 3-minute is coming in with a number 1, green on green at the bottom, which is very promising. When you see that, then you know what, you're a little bit of Christmas here. Now you can see the next candle, we are actually green on green. So I can actually stay the course. I can actually stay the course. So you can see we never really hit a huge amount of risk there, only because the 2 time frames were in sync. And you can expect that when you get in at the resistance point. Notice where we got in? We got in right on the 13, so you can expect a little bit of resistance, which is why I always take some profit and then I ride the second contract out. Makes you feel more comfortable if you take some profit. Those of you who, and you can do that very comfortably with a $2,500 account. Now, let me just speed this up because I just want to get to the exit point here. So what we're looking for is the number 7 at 1305. As you can see, it's actually going to go probably all the way to the 50. And so I could have exited. Oh, it took me out already. I could have exited at the 50. Sometimes it'll squeeze through. Okay, 1303. So I could have taken a whole lot more. Didn't move my exit point fast enough. And here we are at 1305. This 200 SMA is a very good place to exit, right? And what do you see? Immediately on the 1 minute, we are at a number 7. It's time to get out. It's better that you get out at a number 7, especially when you see Christmas, than trying to ride it through an 8 and a 1, because if you try to ride it through an 8 and a 1, it could come down on you. It could suddenly turn around. Sometimes it can go a little higher. That's up to you as a trend trader if you want to continue and grab the extra momentum that comes in. But I would suggest that you get out on 7, especially when you see a strong resistance point, and just take the profit that you got. Look, in one trade, we made $250. We could have made a little more, but we made $250, one trade. That's all you need to do to wait for your alignment. 2 contracts, we invested $2,500, we put 2 contracts on the table, that's only $1,000 of your investment, took some profit, took a little bit more profit using the numbering system, and we just wait for the 3-minute and the 1 minute to align. And that's it. That's all your reversals are. Wow, I had no real idea how much I need more Segredo training. I learned a lot today. Thank you. Excellent, Kathy. Yeah, there's lots of little nuances, and the cool thing is it's not just about following numbers, okay? If you're just looking at the numbers, you're missing a whole lot. You really got to see it as, you really got to understand your strategies that you're trading, as Barbara Cohen has designed, and how to transfer that information, your strategies, your gap trade, your trend trade, and your reversal trade, and how to use that information and transfer it into the Segredo and look for those alignments that define those strategies. That's really the key thing here. And if you use addition to that, you'll see when you do it real time, I want you to go practice real time looking for this formation. And then if you go with your mirror signals, your buy and your sells, they will come in and they will tell you, it'll give you that extra boost to tell you to buy or sell as well. And they'll actually come in on the different time frames too. So you can buy on the 1, as you can see here, the gold's buying on the 1. The number 1 on a 15-minute chart. You can buy on the 3-minute chart. You can buy on the 1-minute chart. You can actually play the different signals as well. So are there any last few questions here This is great. You're getting into the details and the strategies. This is really helping. I need more of this. Thank you. Excellent, Medea. Do you have a drawdown limit? When do you determine it's time to exit a bad trade? Well, that part is discretionary. It's really a lot